In this video, I'm going to be telling you my thoughts on when interest rates will stop increasing and start plateauing and coming down. I'm going to be telling you when I think Sydney, Melbourne property prices and just national property market is going to stop falling and going to start reversing and going up again. And I'm also going to be telling you where the best opportunities to invest are over the next 1, 2, and 3 years across Australia. If you're interested, carry on watching. My name's PK and I help people build passive income using the Property Investment Accelerator, using data without needing a $15,000 buyer's agent every single time. In this channel, we discuss the economy, property investing, and financial happiness. Hit the subscribe button, give it a thumbs up. Let's go. This first chart is very, very important. US rates. You can see right here the trajectory of US rates. Why am I showing you this? Because US rates and the US economy often dictates or is a precursor or a leading indicator of the Australian economy and Australian interest rates. The world is globalized and interconnected. The different lines are different futures curves for interest rates. For example, 3-month curve is this purple one, and 10-year rate is this other one here. They all generally go in the right direction, but you can see that the further out the futures curve was, for example, 2 years, 3 years, 5 years, 7 years, the more smoother these gains have been, whereas this 3-month one all of a sudden hiked up very steeply here because all these interest rates rose out of the blue. All of a sudden, central banks, especially not the Fed, they didn't realize inflation would be such a problem so soon. But the reason I'm telling you all of this is that we've started to hit a resistance level. What do I mean by that? Before COVID happened, around 18, 19, even early 20, the US economy and the Australian economy was actually pretty poor shape. And that's why interest rates at that time were actually coming down. It's not just because of COVID that interest rates are coming down. You have to understand this. The national and international economies were a little bit fragile and getting weaker and weaker going into 18 and 19. And so interest rates were coming down. Right? And now what we've seen is inflation has gone through the roof, interest rates have gone up, and they're basically at the same levels as they were at the last peak, at which time the economies were pretty fragile. So it's very, very, very unlikely that these interest rates can continue to go up much further. Can they go up more? Maybe a little bit, but by going up even more, another 1%, 2%, that will just destroy both the local economy here in Australia and the US economy in the US. We already know that according to our definition, the US is already in a technical recession. They've had 2 quarters of negative GDP growth. The more that the Fed increases interest rates, the more that economy will crumble. Remember, the Fed's remit is not just to destroy inflation and bring it back down, but also to keep the economy thriving. It just needs to cool it down a bit. And if it overcompensates, that's a bad thing. And we're already seeing signs of the economy, really cooling down over there and here. And also we're seeing signs of inflation cooling down. I've done a whole separate video of that right here. Okay, so one of the very first people over about 2 or 3 months ago to say inflation is starting to cool, and I don't see these interest rates going up beyond another 1 or 2%. That's my first prediction. Here's my second prediction. Sydney house prices are falling at their fastest pace since the early 1980s, and that's a good thing. What? That doesn't make any sense. Check this chart out on the left. Okay, what this shows, each different line is a different period of time in which house prices fell in Sydney. For example, between 2017 and 2020, they fell almost 15%, and it took 22 months for that to happen. Again, in 2004 to 2006, they fell 7.6%. That also took 24 months for that to happen. In 2010 to 12, they fell 3%. That happened in about 16 to 18 months, etc., etc. What we're seeing right now is the fastest decline of Sydney house prices, basically ever. Okay, so this dark line is 2022. They've already fallen 5%. Actually, this chart's already 1 month old. They've actually fallen 7 and a bit percent now, and it's only been 5 or 6 months. So why is this a good thing? It's a good thing because what I'm predicting is that this rate of fall will be so steep, it will be so sudden that we will start to see Sydney fall between 15 to 20%, but within the 12 to 14 month time period. So it will be a similar quantum to 2017 to 20, maybe a little bit more, but in half the time. So that creates a lot of pain. It creates a lot of ugly media headlines, but the pain is like ripping a band-aid off really quickly. And that's exactly what has happened. Interest rates have gone up the swiftest, velocity basically ever. And so that band-aid, it's like, oh, it's on like, your hairy part of your arm or something. You're ripping it off. It hurts. And it's never hurt this bad before. But once you rip the band-aid off, it's off. You're all good now, right? You don't need to, kind of feel that pain for 5, 6, 7, 8, 9 seconds. It's just off in a millisecond. That's what the Sydney property market is experiencing. Within a year, it will have fallen 15 to 20% or thereabouts. And so then we can get on with business. I already said the interest rates won't go up by more than another 1 or 2% because of the economy being very weak. It's all happening so quickly, and in about a year to 2 years' time, we'll be on the other side. Okay, Melbourne, you can see, is a very, very similar story. But does that mean that we should hold off from investing for another 1 or 2 years? The answer is no, and here's why. The Sydney and Melbourne property markets are not the only property markets available for investors in Australia. This is an amazing chart. It shows Sydney, Brisbane, Melbourne, Perth, Adelaide, Canberra, Hobart since the 1980s to basically now how they've performed. And I love the way that this is displayed because it shows, let's say Sydney, it shows that since 2010, the average growth rate per annum has been around 14%. Obviously, there was a decline period here and then there was a boom period here, but on average, it's been around 14 or 15%. Like, that's a massive, massive growth rate, and I want you to stick with me. That what I'm about to say is going to be something that almost all of you don't know. Regression to the mean. Regression to the mean. The law of averages. What the law of averages suggests is that if an average growth rate is, let's say for property, 6 to 7% over the last 100 years, cities will go beyond the average, outperform period of time, and then they will underperform for a period of time. The more that they have outperformed in recent times, the more they're likely to underperform in future times, because over the long term, there's regression, or they regress back to the mean. They regress back to the average. So some people think, oh, Sydney's grown a lot. That's where all the property growth happens. No, the past does not dictate the future. In fact, sometimes it predicts the opposite of the future, because things that haven't performed well, they tend to perform well in the future, and things that have performed well, they tend to underperform in the future. So I'm very, very bearish on Sydney going forward, even after interest rates stop going up and plateau or come down, even after a year or two from now, after the Sydney market has come down. Now let's look at Brisbane. Completely opposite story, right? In the, take away the last 2 years, before that 10 years, the growth rate was basically nil, 1.68%. So even though, yes, right now, Brisbane property market's very inflated, over the next 5 to 10 years, according to the statistical theory of regression to the mean, what we're likely to see is that we're kind of here. It's like we're in the early 2000s. We've had a big property boom in Brisbane, but it's probably likely to continue. I think this will be a little bit low in the next 1 or 2 years, and then it will come right back up. Melbourne has been a pretty stable performer for the last 20 years. It had a dip in 2017 to 19, then a big boom like almost everywhere. And I think Melbourne will be steady as she goes. It doesn't have too much to regress back on. It's already been in and around the average, which is 6 to 7%, probably underperforming in the next 10 years. Personally, at an aggregate market level, I think there are better places to invest than Melbourne, just looking at this chart, especially when you compare it to Perth. I mean, everyone will say, Perth, I don't have any confidence in buying there because in the last 10 years, check it out, the growth rate has been on average 0.4%. And that's true, right? It has been terrible, but regression to the mean. The economy is different. The underlying supply-demand dynamics are different. In the last 6, 7, 8 years in Perth, supply has been way more than demand. Now it's the opposite. So you're seeing these prices start to increase. And of course, this is at the aggregate level. There are suburbs where clients have bought, they've already gone up $100,000 in 12 months. And we're not talking $1 million purchases, we're talking $300,000 to $400,000 purchases. Right? So the markets within markets, but the commentary at the city level, you can see that it's so easy to fall into this trap. I only want to invest where I've seen others make money. No. You're too late if others have already make money. Buy in those areas where you haven't yet seen people make money and you can see that demand is outstripping supply. And Perth is one of those areas. So is Adelaide. I mean, Adelaide is very overheated right now, very hard to buy. Better places to buy in the very short term, I would say. But once again, it's had a very amateur or, very little growth rate in the last 10 years, and there's a lot of catching up to do. Canberra is not too dissimilar. And Hobart is a little bit like Sydney. It's just had too much of a good run in the last, I would say, since about 2014-15 when we started buying there. And it's really it's high time for Hobart to sort of come off, cool its heels, and go into a 1 or 2 or 3 year of stagnation or falling prices. So you can see automatically here that when the media says that house prices are going up or going down, that's not true because there's markets within markets. For example, Brisbane, right at this period, 2005, was increasing and Sydney wasn't. Right? So you might have been like, oh, world city where all the jobs are, but hey, Sydney's not going up in 2005. It's Brisbane that's going up, right? So there's markets within markets, and even within Sydney, within Brisbane, within Hobart, etc., suburbs within the city. So there's always a good time to buy. So the conclusion is, my prediction, is it a good time to buy right now? Yes, not because I say so, I have some sort of agenda, but just statistically speaking. And I'm investing right now, hundreds of clients are investing right now. It's not my duty to convince you of anything, but convince yourself by looking at the data. So in conclusion, interest rates will continue to go up, but probably not more than 1 or 2%. Number 2, the economy is pretty fragile right now, and it needs to be carefully monitored by the Federal Reserve and by the RBA. And Sydney and Melbourne are continuing to go down very, very sharply. I think this will be the biggest, sharpest property crash that Sydney and Melbourne have ever experienced since the Great Depression. But, and this is like, almost fantastical to say, but it's a good time to buy property because there are other markets which are quite the opposite in terms of their growth rate. Hopefully that was value, guys. My name's PK. If you did get value, smash the subscribe button, give it a thumbs up, and just really, really understand this. Just put aside my biases, my innuendos, my agendas, figure this stuff out for yourself so you can be confident. I'll leave links below so you can do that to my podcast on Apple and Google Podcasts and Spotify and the Facebook group with more than 20,000 people. If you're new to property investing, it seems scary. It's not. You can do this. Back yourself and go hard. Catch you later, guys. Bye.